Hey everybody, good morning. Good morning as always. Looks like we got a nice crowd going already. Infinity, Eric, Rob, Ted, Rex, Melissa. Don't recognize your name, but welcome to the stream. Nikki, Robert, Sergio, Andreas, Laura, Diane, David, Everett, Dan, Muku, Steve, Francois, Mary, Ted, Svenborn. Good to see you. All the way from Iceland, as always. Gaten, Larry, Craig, Diane. Good morning. Dave, Jan, Michael, Rosalind. Glad to see everybody. Glad to see you. And if you want to be on the chat and talk to everybody, click the button over here. Be a subscriber on the channel. A few seconds later, you can chat and say, hey, good morning. What's up? Hey, everybody. You can ask questions along the way. General Rush, good to see you. Sledge, as always, good to see you too. Amy, Allen, Wade, glad to see everybody. Now, a little bit of housekeeping information before we get too far down the rabbit hole. I threw a link into Discord, but that's not all. I've got more stuff going on today. Today's a busy day indeed. I've got the 5 p.m. show today, and that's the only time of the week that I do requests. But this week, I have a third-party guest spot, I guess you might say, on somebody else's. They'll have it on YouTube, and they'll have it on, I don't know. It's going on YouTube, but it's not on my channel. It's on another channel. So you want to make sure to come. I'm going to throw the link in the chat here. And I'm also doing another thing live at 10:30. So I'm going to be live at 10:30, live at noon, live at 5. And I've got just a ton of stuff going on today, I guess you might say. So let's see if that'll go. There you go. It jammed it all together, but I'll be live at 10:30. I'll be live at noon. And I'll be live right here on YouTube at 5 p.m. and it cut that off for YouTube, but there you go. There you go. Yeah, Rongamer figured out how to put the Cybertruck in monster truck mode. Literally, the floorboard's like waist high, all just about. It was definitely a hop to get up onto the tailgate last night at Scouts. So, and if you come hang out with me at in Discord and you wonder why I'm quiet on Mondays. Mondays I go hang out at Scouts with my used to be my boys, but they since they kind of aged out, they show up randomly. But I still have a commitment to the young men that are still there, and I still show up pretty much every week and put the good influence on them. Anyway, so and Rongamer's comment was, "This is the most truck-looking Cybertruck in Knoxville, I think." With the mud splashes I have up on the sides and stuff. And it's not like I even went off-roading. I just, just my normal driving around doing stuff. Got mud splashed all over the truck. Kind of funny. Anyway, I digress. So today we had PPI coming out, and well, let's talk about a couple things here. Let me pull up a couple of these charts for PPI, and we can flip it over to the Forex Factory calendar thing and look at what they've got. I didn't get this all set right. There we go. That should be the screen share right there. And roll back up to PPI right here. You can see we were expecting a 0.2 core. Got a 0. Expecting a 0.2 month-over-month on regular and got a 0.1. So came in light on both accounts. And we've done that before. What does the kind of all mean? Well, like I said, I brought some charts and let's see if we can hit this really quickly. Where did the chart go? Darn. I drag stuff around and then it covers up, and I need two more charts. Open, drag that over, and go back and grab the other one. Open and throw that in there. There we go. So here's a more accurate, I guess, chart, you might say. We kind of dipped right there, producer prices, and there you go. Final demand on prices. That's producer prices. So this is the input prices. Now, typically it takes like like 3 to 6 months for producer prices to show up in consumer prices. So that big, avalanche of producer prices dropping from 22 into 23, that's where inflation's kind of slowed down. All right, it's not that it's negative. We're not really going negative. We went negative in 2020, but we have not gone negative, so prices are not going down, just slowing down on the rate of increase. So we're seeing that demand dropping off right there. That's basically hitting at the Fed's kind of target 2% right there. I guarantee you this is one of the things they're watching is the inputs. Now, and right here, companies are feeling the squeeze as they eat the difference between the CPI and the PPI. That's part of the whole thing too. You're seeing a lot of fast food companies trying to implement $5 deals. Like yesterday, KFC was one of the ones coming on to the end of the competition with a $5 meal thing. So, the $5 meal deal coming back, it's kind of been the $5 box at Taco Bell has been a thing for a long time. Now I think you get like one item or something like that in your $5 box. Anyway, so it's not exactly a good sign for profitability as stated right here. And you can't hardly see it from my face, so there you go. Not exactly a good sign for profitability that when this goes negative. You can see back here, even though we were smoking red hot in the economy, that kind of led to the situation where we pulled back in 2022. Then we went green here. Everything's good, but this kind of like it's the tail wagging the dog. This we already saw the peak good time. All right, we kind of go through these oscillations where we see the peak good time, the peak, the rough time, peak good time, peak rough time. And these are getting bigger. So this next one could be even bigger on the downside. Just throwing it out there. Just throwing that out there. So, no, the competition is like implementing $5 deals all over the place. No, the $5 deal may be like fries and a drink or something like that, not actual meal, but they're trying to do $5 meal deals. That's the big going thing here. And eating the cost between increasing producer prices and not able to rise consumer prices because we ain't got no money, right? So be careful out there. Be careful out there. That's kind of what it means. Now, coming up tomorrow, let's pop back over. Enough of this PPI stuff tomorrow. Now, this is usually we get the CPI before the PPI. So was it the good news before the bad news? That's what I'm wondering right now. This could be some market chaos in here. Tomorrow, 8:30 in the morning, Eastern time. I'm in Eastern time, so that's 8:30 Eastern. This definitely makes me wonder right there. Definitely makes me wonder. So, yeah, Subway now seasonality now through August 25th, $5. I mean, the $5 footlong at Subway has kind of gotten to be sometimes some cases it feels like a $25 footlong. Anyway, price is just crazy. I mean, like inflation sucks. Not doubting that 1 minute, but it's kind of this ebb and flow thing. Like we get this inflation, and then like all our earnings come up, but it tends to be way slower, and we're all feeling the squeeze. So I'm not saying that it's a good thing or a bad thing at this point. Now, coming up on Thursday, we also have this will be an interesting one. Retail sales, Home Depot announcing today that consumers stopped spending in July. They just hit a wall, and their same-store sales were drastically reduced in July. And here we are halfway through August. So not a good sign for consumers. It's kind of tipping the... I don't even think an emergency rate cut is going to do jack squat. Like, that's... we've already kind of set the wheels in motion. The thing is, though, does this carry trade situation, like, does that cause the Fed to have to raise rates? And the September rate cut odds are down to 50-50 now. They were a lock at 100%, and now back to 50-50. So don't count on a rate cut coming. Don't count on a rate cut coming. If the worldwide carry trade blows out even more, and someone like Japan keeps raising rates, then the U.S. will have to raise rates to keep the carry trade, to keep, financial market stability is like their number one goal. They may go for that over keeping the economy goosed up. So just be careful about the other things going on out there in the world. I had no idea what might cause interest rates to rise when I drew this chart right here almost a year and a half ago. When I drew these prices going, this interest rate thing going higher, we did dip below the low we had back in January, but we did not dip below the low we had the February before. And we dipped down here lower than we are now on the DGS2. This is the 2-year constant maturity rate. This is the market rate versus the Fed rate, the orange rate. All right, this is 2-year constant maturity rate versus the Fed funds. That's what this is. Orange is Fed funds. Blue is DGS2. Now, interestingly enough, we dipped, but we're coming back up. If the world needs the rates to be higher to keep the carry trade in place, do you think they'll side with the consumer, or do you think they'll side with banks? Just think about it. Think about it. All right. I drew this, this is the thing that nobody thought would happen. Back when we were doing rate raises over here, we would level off for a while, and look, I thought we'd level off. I just drew it out to December. I didn't even, we came on up a little bit and then leveled off. I thought we might level off faster. We didn't. They put a couple extra squeezes on us. We may raise rates some more. Could be up here, 8% before we actually break the economy. Weird to think about, right? Would they keep the global markets ticking? Keep the carry trade growing? Would they prioritize that over interest rates and jobs and all that stuff? I don't know. It's asking the hard questions. Thinking about where is the narrative, where would it just take everybody by surprise? That would take everybody by surprise right there. That would, don't you think? Everybody's talking rate cuts and we do rate raises. Wouldn't that shock everybody? Would it shock the market? Here we are sitting here in a dangerous, precarious position, grinding it up. The market just opened. We're sitting right here. A little bit of pop, a little bit of gap up on that PPI. Right below the danger zone, coming into CPI. This is watch out tomorrow. If we reject this and start down, this could cascade into something much larger to the downside here. Much larger to the downside. Yeah, there's the 1-minute alerts firing off again on. There we go. Those were messed up yesterday, apparently. TradingView updated the alert system. If you can tell, it doesn't blast up all the way across the screen anymore. It pops them up stacked in the bottom. They did something else to the alert system, stopped a bunch of my alerts. So if you got a bunch of alerts on TradingView, double check, make sure they're all ticking as they're supposed to. A bunch of mine were paused or stopped or whatever. And so watch out for this. And we maybe just grind for a little bit. Maybe we just come up here and just, hang here for a little bit and then decide if we're going to go down or up. So that's S5 TW. Stock's above the 20-day. We dipped below the trend line. And that trend line, not really. I mean, it's just like I just pulled it over there further. But we dipped below it and pop back to it. Now we may flush it on down. Possible. CPI may come in spicy and freak everybody out tomorrow. Just be careful. Stock's about the 50-day. Still hanging in this watermelon seed squeeze. Apparently I'm going to draw an arrow for... Didn't even click on the tool. And hanging right here. Dip, pop, dip, pop, dip, pop, dip, pop, dip, pop. How long can we go before we run out of runway over here? And when it breaks, 100 is as high as it can go on the upside. 0 is as low as it can go on the downside. Got a lot more risk on the downside for S&P 500 stocks above their 50-day. And we've been out the top. This is a giant market oscillator. If you've never seen this before, we typically go top to bottom, bottom to top, top to bottom, bottom to top. We've been at the top. We have not yet been to the bottom. It's probably going to go visit the bottom before long. And we could pop up one more time. But eventually we're going to go down to the bottom. It's just going to happen. It's inevitable. And stocks about the 200-day. Same situation. And we're kind of rockily sitting here. We've kind of been finding this bottom right here where we haven't really broken below about 64-ish% of S&P 500 stocks above their 200-day. We took a little dip there last week early. Amazingly, that big market rout, look at that. It started happening Thursday. Then we had, I guess, Friday, Thursday, Friday, Monday. There's Friday, there's Monday. Thursday, Friday, Monday. But then we just sitting here. Not getting a lot of participation, not getting a big recovery yet. This can flush on down, so be careful. We could see that, and it took us, last time we went to the bottom. Cool. Last time we went to the bottom back here in October 22. It took us all the way till right here to poke out the top. Almost 2 years. So there's a sell on Levi's. Hit the target. Look at that. Boom, right there. Beautiful, beautiful. All right. Back to it. Yes, let's jump down the lower time frame. See what's happening, crapping in overnight here. We're still grinding, so this still grinding in here. Could this be 5 up? It could. We haven't really gotten a correction at all here. We got this correction. This could have been a sloppy diagonal up, as I talked about last week. This right here, fast retrace. This has the makings of a 5 up, but that would mean that we need to retrace it right here. And we didn't retrace it so far. We haven't retraced it so far. We got to pull this on up. So that support level hanging in right here for ES. Hanging in right there. And if we come up into the red zone tomorrow with the CPI, we could easily get a retrace. And if we don't hold here, that could flush the toilet. Very, very cautious here. Very, very cautious on the market. Now, this one in Q, NASDAQ, if you've never seen these before, these are the futures. These are how, like, the market pundits know before the market opens how we're looking. They look at the futures here. They trade almost 24/7. And this one still has a ways to go up to that danger zone. The danger zone still heftily above us up there. So big tech could, has been, I guess, overly beaten down a little bit and has the opportunity to catch back up. I really would like to see this hold here and then go blasting through the danger zone, not come up into the danger zone, then turn down to here, because that would be kind of a red flag that we may break down and go lower in a big flush out situation. So in Q has more runway to the top. Still has the same sort of setup, the 1, 2, potential for a 3, but these are not very proportional at this point, is the downside situation here. So if this was a measured bounce, we should be getting up to this top of this red zone, not to the bottom. If we stop at the bottom, that's an indication that we did a corrective move up off the lows. Same sort of situation right here. If you don't understand the fibs at all, what I'm doing here, I'm going to be teaching a fib class type thing at 10:30. That's the link is in the chat there up above. So if we stop right there at the bottom of the danger zone, that's a 3-wave corrective, and we can make a lower low very quickly and easily. If we stop right in the middle, that's still potentially corrective and right in the middle of the danger zone. So this confluence of danger kind of all lining up, and it's not, you may if you're not following me at all, this is a very dangerous situation in the market for getting a bigger down. Now, just to simplify, take a step back. Here's the situation we have going on. Despite all the lines on the chart, if we stop at that danger zone, we have the opportunity to echo this first move down in the market. I'll just delete a few of these so you can see it right here very clearly. Very, very clearly. So what we did a move down. We're doing a retrace. If we stop at or in the middle of the danger zone there, that could lead very easily to this flush right down here. And why all the way down there? When you click here, and let's just go with right in the middle of the danger zone. That puts the potential 1618 right down here. Right down here. That 406.02 kind of area. That's a potential 963 point downside. We're not even up to that middle of the danger zone there. So that's the potential right now. From where we are right at the moment, we're looking at like almost 900 points. All right, that's why I'm warning about this, is that if you thought this was a crash last week, watch out for this potential. This could happen. That would feel very much like a crash. So, dun 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 dun. Russell here, not looking so hot. Not looking so hot at all. Bill, I warned about it coming back to the roadmap line. A couple of people are like, no way it would go. And it did it in like 3 days. A couple of people talking to me were like, no way we would get that big a move in Russell. It just doesn't move that fast. We went right down there. And we've been sitting here right on it. Not a bullish sign, which could lead to a bigger flush. And I've kind of been thinking that Russell might drop all the way down here to the 1300 area. This one, when you zoom out and look at that bigger picture, just, some of us like to forget things, but we topped in Russell in 2021. This is 2024. So we made a lower high just a week ago, and maybe 2 weeks ago now, I guess. And this is potential. All right. An echo of the first move down. That's what that basically is right there. And the third move down typically happens faster. So we could see anywhere from the 1500 area down to 1300 with an extension. So that's why I'm very concerned about the setup in the market. This is small caps right here. Has that potential to flush pretty hard. Has the potential. It's just waiting on something. So, been watching and watching and watching. This is very dangerous. Now we retraced the 618, but then we popped up and didn't get continuation. Concerning. So we popped up, we retraced, held the 618, Tried to bounce and losing steam very quickly. CPI could be the event that makes the difference tomorrow. Oil triggered all sorts of alerts for me yesterday, but we still didn't break above that line I drew right there. We did get above the roadmap line. Sitting here consolidating today. If we get the continuation breakout above this 81-ish area, 80, 90, 81, that probably tips the odds. We're going on up to 90, where I've kind of been talking about for a while. Right up there, 90, 40, right there. Put that fib line back on there. Right in there. We'll probably go at least visit that, maybe retrace, maybe bust on through. I think we're set for a date with 105 at least sometime before too long. Sometime. Just, does it happen sooner or does it happen later? That's the big question. Do we go lower first? It's definitely, the prices on oil have definitely been doing a good job of faking everybody out. Like, I was pretty convinced we go lower here, and then we got this retrace. But the other thing to watch here, is that 618 level. We have not broken above it, and it can glance right off of that and cruise on down here very easily. So watch out for increased volatility in oil right there. Gold, look at that baby. I think yesterday was the highest close in history. Nice. That was just a spike, but we didn't get the close up there. We couldn't hold it. We rejected pretty hard. And pushing a little higher today. I'd like to see it ramp on up into the target. And I usually cover silver on the 30 Minutes of Awesome show at 5 p.m. on Tuesdays right here on YouTube. But this one has a huge measured bounce, market roadmap bounce potential right here. 1, 2, 3. If we can break above the 618 at 30, we're going cruising up here to 35 at least, and possibly kick something off much, much larger. Bitcoin still hanging right at the roadmap line, not showing any enthusiasm to do jack squat right now. And sitting under, the spot market sitting under it, the futures market sitting on top of it, and just nothing. Big bunch of nothing. Ethereum looking less awesome. That big gap down there on the futures, ETH/USD. Spot market still way down here. This looks a lot like it needs one more flush for Ethereum. That may take Bitcoin, may put downside pressure on Bitcoin at the same time. So not awesome, right? Not awesome for crypto traders. And DXY looking like we may break down and cruise on down here. And for those that say, well, when the dollar goes down, the market goes up. Look at this. Last week, Friday, Monday, down, and the market was down. So this is, do not get stuck into mainstream media false correlations, all right? The dollar was down, the market was down. It was a flush out. NKD was largely blamed for, you look at the central bank perspective, the Japanese yen shorting it and their market flushing was largely blamed for the responsibility of money flowing out of the U.S. markets. And they're recovering, coming back up to the roadmap line, still looking for support right up, resistance. Resistance when you're on the underside. Resistance coming up right there. Carvana hitting the target or stop. Didn't pay attention which. And what's moving today? SMCI came up this came down to a support zone. We may go retrace to the roadmap line. I still think we're going to flush it on down a little further. This came up to a minimum target, and I had an alert there that said close the puts because that was a logical place. May find support, and we are finding support. So this could rally back up to the 600-700 area before we find out if we can break through resistance or if we're going to flush on down. Flush on down. So watch out for that right there. S-Bucks right there. Look at that. And as Susan said in the chat, S-Bucks calls I mentioned, you had are probably looking good right now. And yeah, nice pop. Nice pop right there. I still have a target up here if we can recover. This went really deep, kind of set the expectation we might flush on down. But holding and popping here can take us up higher. This is why I had several upside targets. That's why I was holding the calls. I was either going to eat them, go to zero. Although if we had done that, I still expected this. So it was kind of like a... And I've got them out for, I think they're 2026. Don't hold me to it, but I think they're 2026. I think I bought a good long time. Looking for that big pop. They're like a... Gosh, what was it? I think a $90 call out to 2026. That one's probably recovering nicely today. Probably. FNGU. Sitting right here. Potential to bounce. We break it back above. We've got these two gap downs here that we've got to get through. So back above the 618, 61.8% retrace. 414.50 kind of tips the odds that we're going to go on up to 627, possibly 694, possibly 911. But we've got those two gap downs to contend with on the way. ANET, potential bounce right there. If we get the close above, and why wasn't this the entry? Because we didn't touch the roadmap line right here. The pattern requires a touch of the roadmap line. If we can get the close above the 618 here today, sets the odds, the tip kind of tips the odds into a higher probability that we're going to get to 390 on the next run here. Be right up there. And just historically, how often has that worked? On 8 trades, it's worked 100% of the time. When we get above the 618, we tend to rally up to that highlighted purple level. All right. Would you take something that's worked 8 times in the past 100% of the time? Seems like a high probability thing to me. You could buy a share, put $340 on it, stop out down here. If it got back down here, 285, maybe make $50-ish. Maybe. It's not an entry until it closes the day today above that line, though. Throwing that out there. NVDU, gonna need a move up above the 618 to get the extension. USD. Ultra Semiconductors. This is a leveraged semiconductor ETF. If we get above that 618, potentially heading up there. NVIDIA, potentially bouncing off the roadmap line here. Potentially. We get above that 618, we can go cruising on up here. If we come up and glance off of it, similar to the S&P, we could do a bigger flush. Right down. And the weekly roadmap line is way on down here at 50. And we have a support zone down at 40 for NVIDIA. Be careful out there. That one could still have more downside. See, we left this gap back here on the daily chart that we may go fill. That'd be pretty rough. FSLR. First Solar. Potentially going to bounce off that roadmap line right there that we hit a few days back. Pop above the 618, sets the stage for 324 right up there. NVIDIA. Dun, 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 dun. Leveraged NVIDIA, same situation. Got the retrace, break back above. Got these gaps up here, but 104, 117, possibly 162 up there. SMH, same chart, same situation, same pattern. Break above the 618, 297. Everything's kind of looking good here. Dell, potential to have found a bottom here. That's actually pretty interesting. We can break back above the roadmap line right here. Watch for that resistance. If we get above there, 620 above that, 200, 219, and that target that I was kind of holding right up there around 230. Might go cruise and hit that. Be a pretty nice upside, right? Go for 100 from 100 to 230. It did drop from 180 down to 100. In fact, Dropped from 180 down to 88. So almost 100 points down. But that sets it up with a huge upside potential. Right there. AMAT. Sitting underneath the roadmap line. I'd like to see that pop above to get the extension. Has the setup, but it also can go lower and retest this support where we consolidated back here last fall, almost a year ago. In July, August, September, October, November. We can go revisit that very easily on Applied Materials. Toyota, potential bounce here. If it holds here, breaks back above the roadmap line, this has a large upside potential. Possibly up here to almost 500. 370, 400. Huge upside potential on Toyota. Really nice, actually. I may buy a couple shares just to sit on it and see if it happens. Now, the downside could drop to 100. So that's like $60 risk versus a potential triple. Not too shabby. Not too shabby. That's a nice risk to reward, actually. SOX6. Potential for that to bounce. Break it back above that 235. 279, 291 up there. TECL. That's a 3x bull on. And be careful on these leverage ones. Anything that's 2x, 3x, they all might not follow my patterns, if you will. And that one breaking above there. Upside right there. No updates. Sony. Oh, very nice, Sony. Let's see what we got cooking here. Getting through, pushing through the resistance. That's nice to see. This one has the potential. So you push right up here to the prior high. Rally from 87 up to about 99. $11 upside. Some people don't like the, what are they doing here? 5 for 1. Not even sure why they want to do that, but they're going to make it cheap. Watch for that pop right there. If we can get above that 618. Get about a $9, 10% move, roughly. XLK. This one's high prob, like, if this one sets up the move above the 618, check this out right here. 77% of the time, it's worked out. That's pretty good. Pretty good on XLK. ARM sitting here, potential to bounce if we get it back above this stuff right here, 210. If we reject right in anywhere from here to up here, this is resistance right there. If we reject that 150 area, we can come right down here. Be careful. That's just one big flush so far, a retrace, and we could flush on down. So this may rally from the 120 area to 150, and then watch out. That would be an area to watch very closely. If we break on through, we could go up to 210, but if we don't break on through, we could go down to at least the gap fill. At least, if not something more sinister and devastating. DPST still sitting on the roadmap line, cannot muster a bounce at this point. Going to need to move up above this 100 to get 129, 137. Remember that carry trade still under stress. And that's indicative of what we got going on right here. AVGO. Looks like we need to break above the gap down right there to get higher prices. 194, 203. LABU. This is a 3x bullish on biotech. So biotechs are not, leverage was one thing. So already this is leverage. So that's one thing I warn about. Number 2 is biotech. This is biotech. So leverage and biotech, that's 2 out of the 4 things that don't always follow the patterns combined into one. So this has had a target up here at 199. Triggered it back here, but we retraced and just been chopping around here. We may go lower. That was at the resistance zone, so it's kind of muddied this whole thing up a little bit. This is not what I like to play, but I know some people like high stakes ping pong. Right there you go. 199 on the upside and potential to go down to 63 on the downside. 50% loss versus like $70 upside, which is more than 50% gain. Yeah, a little better upside potential right now. SPXL, leverage on S&P 500, the danger zone right there, just like it is on the SPX or SPY chart. QCOM, potential to bounce here. If we can do this, if we can pull this off, we have the potential to rally on up here. 300, possibly 400. Be a pretty nice upside potential on that one. 3x or 4x potential. And decliners for the day, FLUT. Not a lot of questions coming through, so I must be doing a good job, or just completely lost everybody and everybody's like, "Rrr." Anyway, FLUT still in this down channel thing with the potential to dip on out and flush this move. So primary expectation is just to hold this right here. A nice flush down here could wrap this correction up, or we could break out, but it doesn't look likely to break out until we do a flush out first. It's kind of the way this works. Going to keep correcting until we get some sort of flush out move right there. And moving on. CMG. I did bring a bonus trade today, by the way. So stick around to the very end if you want to see the bonus trade. There is a bonus trade at the end. I keep forgetting that. I've been doing that every day. CMG here. Looks like it wants to flush on down. This kind of popped up to the roadmap line, rejected, and may flush down into this zone right here. Big splits have not been the most bullish thing we've seen in the market lately. Anything doing 10, 20, 50 for one stock splits just has not been reacting very well after the split. And we're talking about NVIDIA, AVGO, CMG, SMCI. There you go. And Sledge loves bonus trades, and I love subscribers. So make sure you're subscribed to the channel, because I'm going to throw out that bonus trade. And I love just giving y'all more value for just a little bit of your time, I guess. I mean, your time's valuable, so I'm trying to give you maximum value. And Viasat, that rally coming back really close to, oh, look at that. This one potentially setting up the same sort of move as like QCOM and some of those other ones where we have this, and it's in the vicinity of a measured bounce too. So measured bounce and market roadmap bounce coming together at the same spot. That can be the rocket ship trade. Potential for like that. That'd be a wicked move right there, but it's got that potential. Gonna have to see it hold, not just fold. If it folds on down below 14, it's kind of busts this pattern. So we really want to see it hold this $16, $17 area, turn higher, break back above that gap. We set the path for the rocket ship. I don't have like a rocket ship icon I can draw in there, but that'd be like SpaceX rocket, I guess. Some flames coming out here. Rocket ship pattern. Potential. Be pretty cool. So VSAT has the potential to do it. It's not confirming we're doing it. All right. If you're going to risk some money, I would stop out below 1350 if you're going to jump in now. HA, that doesn't mean it won't do it later, but as it dips on down below that 1350 area, it kind of wrecks the high probability rocket ship setup. Hawaiian Holdings, ugh, what a nasty chart. That looks like a giant downtrend since a long time ago, 2016. That's probably going to keep doing that. I wouldn't get involved. And it's like seriously, man. Serious Pharmaceuticals. Now, another, like I said, biotech, one of those things that doesn't always follow the pattern. So look at that, though. Low. This is dumpster fire right there. Reverse splits are a dangerous sign, especially when you see them on a chart that looks like this, where we're going down into the abyss. We got that reverse split back there. People are like, hey, you know, reverse splits, that could be bullish. Look at that big move up. And then you end up down here at $1. Like, oops, what happened there? Ouch. So that's down 62% in one day. That's why I don't mess with the dumpster fire situations. So be careful. This would be serious is a dumpster fire. NVDS, watch for that one to drop. This one, again, dumpster fire. Now, if NVIDIA pops, this one will rip. I mean, if NVIDIA drops, excuse me. If NVIDIA drops, like it might, this one will rip, but not for long. The long term, it'll probably keep declining, and it's probably going eventually toward zero. WES, and that was going to be the wrong one, I'm pretty sure. This is the right one. This has retraced to the roadmap line. Potential to find a bottom, turn back higher. Right there. Goose likes the midstreams. I don't know about this one. I don't think he's on the stream either. And we pop above that 40 area. Could rally up to 43, 44 possibly. That's like, okay, look. Right down here, you look at the dividend payout. Dividend yield 9%. So if you got involved in this on a bounce, we go from 40 to 44. That's a 10% right there. I would not be buying it till we are above this over here. Watch for this bounce, set the alert, get above there. That's a 10% bonus on top of a 9% payout. It's like a year's worth of dividends right there. A little more on the move on top of something that's paying high dividend right there. Beautiful potential. But we need it to set up right there. Bonus trade, EWC, right here. I've got the stats for it if you give me a second. But here's the pattern. We popped up, we retraced, made the low below the roadmap line, moving up, closed above the roadmap line yesterday. Sets the stage for that rally right here. Bonus trade. And I'll give the bias for the market here in a second, like my daily bias. And the statistics on this one, let me pull it back up over here. Right here, right here. So EWC potential entry. You know, this was my tool to find these yesterday. Fired this off after the market closed. Target 39.63. Stop below 34.74. And historical win rate of 80%. 80% of the time it's set up. Out of the 48 times it's done this, it's lasted 48 days, it's done this 30 setups since 1996. That's a fair amount right there. And Kimberly got into this one. My lovely favorite subscriber in the whole world. And she did it by herself. She's been started using this tool right here to find some trades. Just grabbing a couple shares. She's got a super tiny small account. Just doing shares. Gonna try to catch that $1.73 upside potential right there. All right. Any questions? Let me know in the chat or come hang out in Discord on the bonus trade right there. Those are an experimental setup though, only available to Turnmeyer Trading Lab members at this point. So bias for the day, we may come up here. And if we do get up in here, oh man, if we get up in here at the close today, I would buy a little bit of protection. I would, because this could flush extremely. This is like highway to the danger zone right here. I can't stress how nervous I am about this. If we could pop through, all clear. If we stop here and turn down, then break below, the support will be at the prior low right here. If we break below that, we're going down. Highly likely we're going down. Probably back below 5,000. Probably back near 4,600. That's almost scary. Almost scary. So you could, oh, potential. You could go out to, so how would you protect against this, right? How could you make a bunch of money if we're going to do this big flush out? You go out to like December, buy a maybe 500 SPY call or SPX, 5,000 SPX call or 5,000 XSP or 500 XSP right there. Sell, offset the payment on it, sell maybe a 4,800, maybe a 4,700. Then you could collect the premium between whichever one. I mean, then if it drops, if it does actually do this, then you get like that giant boost because your long put will go in the money, and then you'd be limited by either the 480, 4,800, whichever one you did, or the 470, 4,700. So that's a potential thing you could do to protect against a giant downside move like that. It would not kick in until we got down below 5,000. So it'd be like the catastrophic helper trade. I mean, I could make a little money if we dip down here. Probably won't make a lot of money until we go all the way through the lower strike. All right. So that's a potential way to protect against it if you wanted to do such a thing. All right. I get asked all the time, how do you protect against something like that and a bit down in the market? Well, there you go. That's a potential. Maybe play out to December if you want to cover it through the election. All right. Hope you have a great day, everybody. Like I said, I'll be live at 10:30. I'll be live at noon. I'll be live all over the place today. All over the place. So here's here's everything one more time. All the links right there. Have a great day, everybody. I'll see you at 10:30, then at noon, and then at 5. Hopefully you come join me, all the things. So 10:30, I'll be on Zoom. Links in the chat there. At noon, I'll be live on somebody else's YouTube channel, I think, or maybe they're posting it after we record it. If you want to come join me, the link's right there. And then at 5 p.m., I'll be live right here on YouTube, back on my channel. So have a great day, everybody. SPX is the way to short SPX, right?